Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, December 10th, 2019. We'll start out here with brief coverage on the broad markets. Not a lot to report today because the markets are flat. You can see as I'm starting the video, SPY is barely up. It's been teeter-tottering between slightly negative and slightly positive all day. So flat day in the market. One thing I was noticing as I look at the chart, sometimes I like to strip away all my trend lines and annotations and look at a chart pretty clean. So we're looking at a daily chart here of SPY going back into late 2017. Now I picked that period because up until then, in January 18, the market had peaked out and had the biggest drop in years, and that followed the period of unprecedented, never before seen low volatility. We'd never seen volatility, the VIX hit such low levels and stay so low for so long, and then boom, well, point is, from all those periods of very low volatility usually come the big sharp corrections. So in that one it took a while and then you had it there. Now what I noticed when looking at this chart, and I like to do this from time to time, is the market and certain stocks, they work in, I don't want to call them fairly predictable patterns, but there's some symmetry to a lot of the patterns and the moves, both in time and sometimes in price, or both. And so what I did here is I added an uptrend line on the lows off just October 3rd right here. We had a major low after the last correction. And so far, so we haven't taken out the recent high. Here, let me put it right here. What I did is I measured that move, and we'll do it almost exactly here, from that low up to the high. Now what this line will do, it'll tell you two things. Let me clean these two off. I didn't want these here. It tells you two things. The distance to the line this way on the x-axis, that measures the time, and you can see from the pop-up box to the left, if I did that right, yeah, right there, that took 1.8 months. And then if you measure vertically here, that gives you the percentage gain, which is a 10.73. So the line will give you both the time and price on that rally off the correction. And what you'll notice is if I move it over here, well, let's start with this one. You can see that rally off that last correction back in July into the late July, early August lows, it was a smaller rally. It's in both time and price right there. The correction before that, and that was the biggest one in the year right here, that ended down in the May lows, identical. Almost identical. I put it on the lows in both time and price. Pretty interesting to note. And the takeaway from this is, you don't go shorting just because, okay, this is the biggest rally that we've seen or matches the biggest rallies. There's a couple more here to show you. Little correction there. That one was again about the same in time. You can see again the same amount of time, a little smaller in price. This was a V bottom. This was a correction mode. So what I'm looking at are the rallies within an uptrend. So we're going to ignore this. Was I say this often, the markets are like a rubber band. The more they get stretched, the more they snap back. And so here's another period right here, going back, where the rally was after the correction. It was a little bit more in price. This one lasted a little longer in time, but about the same in price. And then right here, off that major reaction low right there on that correction, we had a rally that was about just a hair below this current one right there. And then this one, interesting enough, right here, that first shot across the bow, and late January into the February lows, almost exactly the same in percentage gains right there. It just occurred a little quicker. So you can see, the point is, I measured all the rallies other than the snapback rally off the extreme oversold conditions of that initial leg, and so far this one right here is we have not seen a rally exceed that amount in the last 2 years. Pretty much, again, other than this snapback rally right here, and again, once we had an uptrend established, such as right here and right here. So food for thought. And what it tells me, a couple things. It's not a guarantee that we can't have another leg up before the next considerable correction, but it also meshes with other things on here, such as the current overbought conditions. We're overbought then, we were overbought here at that last correction, we were overbought here at that previous correction. So all the corrections so far this year, and just about all of them going back, again, for the last couple of years there was an extreme overbought reading right there. So pretty simple stuff. And what it tells me, it says, look, the risk reward again is just not very favorable. We don't have any solid sell signals, but to be short here for a swing trade for a correction of 5% or more probably has pretty good odds. If you set stops not too far above. Now, as far as the timing of it, let's zero back down to those 1 minute charts. I posted those updates this morning. This was Friday's gap right here. I just jumped down to a 5 minute chart. We had this gap up on Friday, almost perfect backfill the gap. Now you don't see that on your charts if you're not looking at pre-market trades, and this is another takeaway from this. If you're trying to actively trade, if you took that QQQ short trade yesterday, I posted in the trading room, right here on a break below 204.59 for a backfill the gap, that was 0.8%. And you might say, Randy, it's not worth it. What's 0.8%? Sure, and it might not be. This is when you're in this type of mode of a very low volatility, you have to bat singles. That's all you're going to get. If you're lucky, you get a double. You're not going to hit a triple or a home run. You do that once volatility clearly expands, once you have some clear sell signals on the daily time frames or even weekly time frames. That's when you start, at least on the broad markets, trying to hit those triples or home runs or even grand slams with 10+% gains, whether it's long or short. But there it is. So the gaps were backfilled, and we bounced right back to that 204.59 level. That's interesting enough. And that pretty much, and that was, remember, that was support yesterday. So that was the whole premise of that, short trade. And we broke it. We made a perfect back test right there. I'll give a second opportunity to short, and then boom, target hit. Take this trend line right now. Looks like it kind of evolved into this overnight. And again, if you're not looking at the overnight trades, that's where a lot of resistance levels and price targets are being hit on both the futures and of course the indexes as well, these ETFs. So if you take away the pre-market trades, well, it looks like we only partially backfilled the gap, but in reality we backfilled it, and it was bought up at that point, and you can see we had a sharp rally in the pre-market session, and then boom, hit that 204.59, which has so far capped the rally. And as I said this morning, I suspect we'll get another leg down, but until we break that low, this morning's lows in QQQ and SPY, you really don't have anything any solid sell signals, I should say. That's a little trend line right here to watch on SPY, right there. Ideally you want to see it stay below there if you are shorting this kickback rally, and if you're long and you bought the dip, I can tell you all day long, if you believe the market was going higher and you were looking for a place to buy, I could think of no better or more objective buying op than the backfill. Was almost perfect backfill the gap. This was Friday's close on SPY, 312.04, and you can see we just slightly undercut that level. So it shows you, technical analysis is working. That's where dip buyers come in. These gaps are like magnets. Once entered, the bottom of the gap is like a magnet. Gaps are usually backfilled. So where we're at right now, this is just micro analysis, guys. It's just not, I've covered plenty on the longer term charts. Not a lot has changed. There's a little uptrend line. Looks like SPY is working its way up. I could probably put the same on QQQ, and so you may want to watch these. That could trigger some selling this afternoon. That's what I think it would do if we break there. I'll look at it the other way too. An upside break could spark a rally and some additional buying. But I still, as I said this morning after we hit those levels, because we were at support on the futures and SPY and QQQ, favored a little more upside before we go take another leg down. And then I think, again, we need to undercut those pre-market lows right there in QQQ, SPY, and the futures. And we'll talk on the futures, or look at those real quick. There it is. This is NQ. Zoomed in a little bit. It's a 60-minute chart, but if you recall, last week we had those beautiful bear flags that played out perfectly. This perfect symmetry. We had the flagpole, and then the NQ hit its measured target in QQQ, and then from there we bounced. And last night you can see we set up a smaller but very clean and clear bear flag patterns, and those broke down in the early hour sessions, and again that's when those gaps were backfilled on QQQ and ES, or SPY I should say, and as I said this morning when I took the screenshots, that was a momentum fueled overshoot. This little white line right there, the candlestick wick, You can see all 60-minute closes. These are the same. I believe I had this level on charts I covered yesterday. 83, 16, 63. There is no 63 on NQ. It trades in quarter point increments, so we'll call that. You can round it down to 83, 16, 50, or round it up to 83, 16, 75, or even round it a whole point. But either way, look at how well the technicals work. Once we had that momentum fueled overshoot right there, we snapped right back up on that same candle. All four. Well, there's a fifth candle just above it. 5, 6. Yes, 6 consecutive candles closing right on or just above that level. That shows you they successfully defended support. And again, it was almost a perfect move out of that bear flag pattern. So the buyers stepped in and bought it, but then they ran it back. I had highlighted this the other day as a support level, which I said would probably trigger, a sell signal if broken, and that was, and that's what happened. You had impulsive selling when that happened. Now just extend this over. That was that level. It's at 83, 82, and that's what capped this advance so far. So like I said, indicators are in bearish territory here on the 60-minute chart down below the 0 line. We are coming off a divergent high, so this is what I think happens this afternoon. If you're, an active trader, this is what my plan is. Short here and ride it down with a stop not too far above these highs right here today. And once we take out that level, I think there'll be some more downside, and we can probably get on down here. I think it would come on down to 8,200 in the next few days. But we're going to need to take out that level. Otherwise, we can look at this glass half full instead of glass half empty and say, okay, here's an impulsive move up, right? And we now have, this is called a bullish pennant. You have a bull flag, looks like a bear flag in reverse. That's a bull flag pattern like that. And bullish pennant, its close cousin, has the same net effect. You just have the consolidation takes the form of a pennant, and then you look for an impulsive upside break. So that would be the bullish scenario, and that would, if you're short, you should probably be stopped out. Depends how much room you give it, but we could come in, it would take us right up for another back test of that trend line there. So again, this is all micro analysis, and if it's not your thing, if you're not a very active trader, ignore this. Wait for some better sell signals, or like I said, the market can continue to drift high. If you're wondering why I'm not buying the dips, I covered, but why I'm not as a swing position trader going long, again, it's just not my type of breakout. The breakout that occurred recently to new all-time highs occurred with overbought readings, negative divergence, just like all the previous breakouts in recent years, all of which had failed anywhere from just a couple days or maybe in the following day up to about 3 weeks later. And I still think that's quite likely what will happen here. And if we do fail that breakout, look for a pullback to about 195.37. And if you are want to play the current trend, buy the dips, well, you had your opportunity this morning. I can certainly say it's not objective right now because you ran into resistance. At best, maybe wait for a pop above today's highs. And again, if you're shorting, we're right on that trend line now. So by the time I wrap this video up, we may break down. Let's see what happens there. I'll try to do an update. Okay, enough on the broad market. Again, it's like squeezing blood from a stone, water from a rock right now. There's just not the volatility for a swing trader to make money other than very short-term active trading using larger than usual position sizes, to get that 0.8% drop that we had in the Qs from yesterday. And that wasn't off the highs, that was on where it was triggered. I wanted to update this one, ASNA. These are just a few I'm highlighting from, they were all highlighted in Friday's video, Swing Trade Ideas. ASNA, Essentia Realty Group, retail group, I'm sorry, excuse me. We had a back test right there, breakout back test of the downtrend line, and it's moved up. Now it popped this morning pretty high, and it's given back some of those gains from where it was. I can't remember exactly. I know it was Friday I covered it. Let's just say it was somewhere in the middle of this candle, up to this morning's high, about a 56% gain. But it's a penny stock, so I cautioned you there. Keep it light. Small position size, or stay away from it if you don't know what you're doing, you're not aware of the risk. You can trade a penny stock. Sometimes you wake up to a Chapter 11 bankruptcy filing and the stock is down here, down 70% or more. So either way, it's starting to move up. And again, I don't want to put too much in it, just one trade idea that's playing out from the other day. Another one, GTT, has broken out as well and also had some nice gains, up another 8.38% today. I mentioned 1073 is a pretty key resistance level, and since breaking that level on Friday, that's a little higher, 1075. I'm starting at about a 18, 19, yeah, a good 19% rally so far, and it's in that thin zone that I talked about now. Remember, this one has, the potential, if the market holds up or the stock, it's maybe it's part of, it's obviously a telecom stock, and I just don't know if it's part of the included in the telecom component of the S&P 500, which is now called the communication sector. But we're talking about 100% return, and so in a stock like this, how do you trade it? Well, you have to give it a larger than usual stop. That would be a 10% stop, and that's a pretty ideal place down there. You could even give it a 20% stop, and you might say, Randy, a 20% stop, that's crazy. Well, no, not if you're targeting a 100% profit target. 20% stop is using a 5 to 1 risk-reward ratio, which is a phenomenal risk-reward ratio. You're risking, 1 unit of loss for every 5 units of profit potential. But again, you could, on this one, I'd keep it closer to the belt here and keep it about a 10% stop. There's pretty good support there. So about a 10% stop, that gives you, depending on where you took it, a 10 to 1 RR. And the key to that is, even if a 10% stop is too large for your comfort level, well, the key is take the position size way down. Take a half or even a quarter or less position size. If you take a half position size, then you're making, and your targets hit, you make 50, you're comparable to a 50% gain on a regular position size, and that 10% loss is really effectively a 5% loss on what a normal position size that you would take. That's double this. Again, if you took your position size down in half and you take it down to a quarter position size, then you cut that a 10% stop loss is effectively about a 2.5% loss for you on an average position size. It's all relative to how much you trade. That's GTT. I just want to update it that it's it's broken out and it's moving, and volume's been good lately too on that one, coming off that divergent low. PBYI, I mentioned that one again on an update on Friday, up 10.4%. Came in, I think on Friday, yeah, we were back testing the trend line, which was an objective entry there. If I can hit the crosshairs right there. And so it's so far moving up. Obviously, I want to see it take out that previous reaction high and hit that first target. Still, this one's, I believe, an active trade, and that second target up there. So far so good. The fact that it's moving up fairly impulsively today. Oh, and the PPO is still in bullish territory. That's one thing I like to use as a trend indicator. PPO crossed above the signal line. The white line crossed above the 0 line. And that typically indicates a bullish trend. Sometimes you do get whipsaw signals, but this one's coming off a divergent low. So, like I said, still looks good for now, and so far has avoided our max stop on that one. And then SIG, I mentioned SIG on Friday as well. That one's, like I said, it came very close. These are unofficial trades, so unofficial, unadjusted targets. You want to sell a little bit before the actual resistance level. Still looks good for now. I think I updated this one yesterday, so let's move on. It's taking a little breather today, and that's fine. All right, other ones I want to talk on, and we'll wrap this video up, are commodities. Now, I'll start out with the one-size-fits-all options. If you are not an active trader, I cover a lot of trade ideas. You don't know which ones to buy, which ones to not buy. I try to make a point as to the difference of a trade setup, an actionable trade, and a trade setup. SIG, up until before it broke above 1869, it was a trade setup. I think when I first highlighted it the other day, if I recall, it hadn't yet broken out. You had this period of consolidation here with a well-defined resistance level at about 1869 or so, and then an impulsive breakout. So that's an actionable trade from the point it broke out. If it was trading here just below that level, still within this trading range, would be a setup. But as far as trade ideas, if you're looking for ways to diversify your portfolio, or just things that have better risk-reward profiles, more upside potential and better looking charts in the broad market, I think this I continue to focus on commodities. This is one idea I've shared here. It's not a complete one size fits all for commodities, but one size fits all in the agricultural sphere of commodities. So you have, as you can see up here, you have these ag commodities, live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, lean hogs, feeder cattle, and cotton. Those are the percentage terms. Broke out. It's been moving up steadily. So this is the one we had. We did have some divergence here, but so far it's burned through that divergence. Commodities are really doing well. A lot of them, like coffee and all that, they're shrugging off some of their divergences, correcting more so in time than in price, or just completely burning through them. There's a little price channel to watch. We're going to keep an eye on this one here, but we're above that downtrend line. I should add another level here, right about here. I see some resistance, and we're there now. So I like it for a longer term position. Ideally, you'd want to see it burn through this price channel, get a little bit more above that 1640 level, and then that should open the door for a move up here. I'm going to revise this target down here and make that a better fit right there, about 1691 next target. These are lines I've had on this chart for a while, and I'm going to put that one right about there, 1745. So these are the swing targets there for DBA. PPO is constructive, telling us that the trend is clearly bullish. We're above that zero line. We're bullish there. And remember, these guys are coming off. They're still in a longer term bear market, but I'm seeing mounting evidence that the bottom could already be in, or may likely be close to being in. And remember, they're commodities. They don't file for Chapter 11 bankruptcy. They don't have a corporate fraud, anything like that. So there's going to be a downside, and they're really beat down when you look at DBA. Going back, since 2014, right here. Again, it's a basket of commodities. It's down 50%. So if the stock market's overvalued, these commodities seem undervalued to me. Another one is GCC. That is more of a one-size-fits-all because you have both hards and softs. Soft commodities are things that are basically grown or raised, cattle and corn and soybeans, whereas hard commodities are things you mine or pull out of the ground. That'll be even gas, metals, things like that. And so this one has it all. And you can see some of the weightings there. GCC, Wisdom Tree Continuous Commodity Index Fund, broke out of the downtrend line, continues to work its way higher, and still headed up to that, I think at least, at bare minimum, that my next target there at 1845. So again, those are your one-size-fits-all options. Narrow it down a little bit if you like to add commodities, but you're really focused more on just soybeans, wheat, and corn. That's JJG, gives you exposure to those three. Joe, you guys have known I've done many updates. Look at that, it blew right past that fourth target today. Strong bid under coffee. I've talked about it many times. I said when coffee wants to run, it can run, and it can defy overbought and keep going. So as I said today, we hit that target. I had a line here I added that one in after the screenshot. So I said, consider a stop above this trend line. It's a real steep up trend line right there. Consider a stop there if you want to let it continue to run. Just don't underestimate how far it can go. But it is certainly overbought right now. So like I said, stops are prudent to protect profits unless you're a very long-term trader, because this is a pretty powerful bottoming pattern, in coffee right here. And we've kind of broken out of that. It's almost like a big W pattern right here. You can see it. And we've broken out of the W pattern. So coffee could have a lot more upside to go. And again, these are, places in your portfolio where, that showed you that recent leg up in the market was about 11%. Well, this is about a 40% run in coffee since mid-October. So like I said, more bang for your buck in places outside the broad market, in my opinion. Sugar looks good. Broke out of this trend line, broke above that 4181 level, and it's starting to move. So I'm just seeing I'm really seeing a lot of these commodities just firming up. Charts had been constructive for a while, positive divergence at the low. Here's wheat, and wheat's still looking good to me. These are additional targets. PPO's in constructive territory there. Oh, the zero line is back testing there. It looks to be an objective long right here. About 552 was support. There's support down there if it falls to 528. And I probably have a stop a little bit below that 528. That was a previous trade stop right there. All right, BAL is cotton. It's another commodity. Cotton looks poised to run if it can pop above 39.26. It had a failed breakout attempt there, broke below this downtrend line, but it's really been holding up. And so I think a solid break above 39.26, and particularly that previous reaction high, should do the trick. Again, more of a bottoming play. These targets were from a previous trade up here, right here, these ones over here. But I would just trail stops up on it, and I wouldn't even focus on any near-term targets. Again, look at that as more of a bottoming play than just a quick, 4 or 5% swing trading up. Not one of my favorites, but it's worth having if you want a basket, if you want to have individual commodities instead of going with one of those one-size-fits-all ETFs. What else did I need to cover here? USO I've updated recently. I did an extensive analysis. It's pushing up against that downtrend line. That's crude oil, and then soybeans. Of course, I've been updating those, running off that most recent divergent low. The setup was most recently posted in the trading room. Where was it? ZB? No, it's ZS. I always click CB. ZS. I've got it down here somewhere. Just bear with me. Got a lot of charts down here. There it is, ZS. Still walking up that trend line. So if you took the breakout here last week, watch a break of that trend line plus the 896 level. That was a former target. We overshot it. The next resistance level is this downtrend line. But again, the common theme is divergent lows, potential bottoming plays in a lot of these commodities. And I won't go into all the metals. I want to wrap it up here, but I will touch on PA because it did, remember, it tried to pop above the midpoint of the channel, failed. It's been back testing from below so far. So, really, I don't want to call it it's not a hard sell signal, certainly not. But as I mentioned, PA has traded much more in line with the stock market. So whether or not PA continues to walk up this price channel or comes to the bottom or even breaks down will largely or most likely depend on what the stock market does. So I shared my thoughts there, and as I wrap the video up, I don't think, looking at another monitor, we haven't really sparked a sell-off yet. I'm still watching those trend lines. Where did it go? A 5-minute chart I had. We're creeping below it right there. So we're below the trend line. Not really seeing impulsive selling yet. Let's see if SPY broke down, because you want to see both. SPY is just inching below the trend line right there. This is a 5-minute candlesticks, a 5-minute chart, so we haven't even printed a 5-minute candle close. If we get a red close below there, that would increase the odds of a move down there, but again, we'll see. And there's also some support I'm going to add right here for you. I think that will probably do the trick. If today, about 313.61, I see some pretty decent support. If that goes, then we get more downside. Otherwise, we could pop the uptrend line, the downtrend line here, and continue up. So my conviction is not very high, but again, I lean that way. I'm leaning towards that other leg down, like I said. All right, we'll wrap it up here, and if anything else stands out, I'll get it out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.